Here we go, guys. Another reaction video. Who traded PayPal better? Gareth Soloway over at End of Money Stocks or Crypto Charts Joe? Okay, so anyway, we'll take a quick look here. Full disclosure, kind of some background information. Way back in the day, I was actually a member over at End of Money Stocks with Gareth Soloway and Nick Santiago. Two great guys, two great traders. Learned their system. And anyway, just kind of give you some additional background information. Man, I was so hard up back then. I was having to work part-time jobs in order to pay for the membership and the courses, and then also to put money back into my account. Because as you know, when you're starting out, and that's for everybody, okay? You are a depositor. You're putting money into your account day in, not day in, day out, hopefully, but week in, week out, month in, month out. You're putting money into your account because only the pro traders, the top 8%, are withdrawing money, pulling money out of the market, okay? And you'll get there, just some hard work, some effort, you'll be a withdrawer as well. So anyway, let's go and hear Garrett's take on PayPal.
This is PayPal reporting earnings yesterday after the bell. Take a look at the dump in the after hours, where it's trading now at 66.84.
Okay, but Gareth, you missed all of this, man. Okay, this is where time stamps don't lie. This is our chart of PayPal, and when you see the blue arrow here, right here, you see where we took our short position. We're up, a little bit of money right now, actually. And the reason, first of all, let me show you this. Around the 200 here, we had some resistance, and our Patreon members know a 90% odds probability set up when price gets in and around the 200 that we can share with you over on our Patreon member site. And then we also knew a little trick that when price makes a near-term new high, there's a 70% chance, odds, probability, and that's all you have to work with in this game is odds and probabilities that you get a pullback, it fails, okay? So we took a short position there, and here we are today. And then let's go back to Gareth right quick.
All right, now the kicker is this, right? So we know that we have this type of movement here, and I want to show you exactly where the day trading levels are, where the technical support is. All right, so if we go to this chart on the daily, you can see again, this is where current price is, this is where it closed yesterday. Now, right off the bat, in terms of a trading level, there's a level right down here at around $63 a share. Now, where am I getting that level from? Let's talk a little bit about that. Let's zoom in here. All right, see this pivot top right here, and how it coordinates right with.
Okay, now let's go to the charts and I'll show you what he's talking about. Okay, we're going to, first of all, this is a potential resistance line. This is where it's trading right now, live. And if we get back up and over that resistance zone, this is a huge gap down. So very oversold. So actually we could, potentially actually get a green candle or a consolidation through here before we drop lower. But I just want to make you aware of that. And the area that he's talking about, and it's very elementary, the high pivots, low pivots, and this consolidation zone. So actually this should be, when we get down here, this should be real strong support. But I do see us wicking down into that 62.30, 62.32 area. And remember this, and then get back to me. We have a 90% probability of a bounce here. Our Patreon members know what that's all about. And then, but this is going to be pretty good support. Go see all, coming back down into it because it was support over here for several days. And then this was institutions buying in here, okay? And whenever you see sideways consolidation, it's either institutions accumulating or, selling off. And they're doing it slowly because they don't want a big green candle here to upset their, price average to the upside. Or if they're selling distribution, they don't want a big red candle, coming in, upsetting their, cost average to get out of that play. Okay, and then also resistance here. A lot of times previous resistance will now be support as you come into it. So you have, two areas to help with that. But I think the money play is going to be right here at 62.32. So let's go back to, well, yeah, to Gareth.
With that low pivot, pivot to pivot, that gives you a level where right here, that's going to be a technical support level. Let's throw a trend line in there right now so we mark that level off. Now, if it breaks that level, and by the way, there's always a chance that it can break that level. You know where your next pivot point is? Your double bottom right down here, and that again is at a
Okay,
price point.
let me go to our chart. Right, he's talking about this one down here, okay? Let me get myself out of there. Yeah. Uh, but of course, as you come down, you're looking at this area too. Previous consolidation, previous support, and before, the big breakout, which was a head fake, and then lower it went. So, yeah, let's put this back up here right now for a potential move back up to the upside to break that resistance. And we'll see if that, comes to pass near term. And then we'll be looking into this area, for the next, we're going to put blue there for support. And then really this is our go-to area. Not that we're going to, bounce all the way back up here to the recent high, but we could get a, pretty good bounce back up into this high pivot here, which was previous, resistance, okay? So we're looking for that to be resistance yet again. Okay, so let's go back. If I can click the right button.
Of $59.50 approximately. So right off the bat, you have your two levels on PayPal. This first one to me is not a swing trade level, to be honest. This second one could be. Now I say could be because anytime you're thinking about swinging a stock, and this is great education, guys, you want to go to the bigger time frame. So right now, yes, I think this level around 59.50 could be a good swing trade, but what do we want to do? We want to look for a secondary factor. We want to go to a bigger time frame. Now, what's amazing about this is we can see if we zoom out on the chart of PayPal, it's had such a decline. All right, now, interestingly enough, I want to show you this because this is a big deal. If we zoom in, we can see that this wide range bar, look at how price rallied, but it never got above. Here's the high of that candle, and that's where we were. Now we're coming back down. This is called an inside bar, and anytime you get a wide range candle, there's always going to be a massive amount of selling right here and right in here. Now let me explain why there's a massive amount of sellers right up here. Because when you were down in this range, look at all the exchange of shares. People were selling and people were buying. An equal number of buyers and sellers were exchanging.
Okay, let's break this down to uh, more reality of what's actually going on. He's talking about, let me take everything off, clean this up for you. Actually, as we talked about before, this is all, either accumulation or distribution by the big players. Okay, that's what it is. They don't want a big red candle coming in here because they're, selling off here, looking for a, push to the downside, or they're accumulating here looking for a push to the upside. Okay, and this big red candle is not, mom and pops out there selling. And it's and now what we're looking at, depending on where we saw this, is the weekly candle, all because of today. And we came up to that 50. Once you get under the 50, it's real hard to get back up and over it. And then on the daily, the 50, many times institutions, any hedge fund, mutual fund, whatever, retirement fund will start slowly scaling out under the 50, as that's in their, which is true, in their mindset, coming into a bear market. And another little caveat here I'll share with you. Our members know about this. The strongest reaction, and go back, check it out, see if online, on any chart, on any asset, when you see this consolidation zone, the strongest breakout that you'll have continuation, either to the upside or downside, depending on which way it breaks, is the fifth candle. So you look for the biggest candle that dropped or popped. And then if you consolidate, as you're consolidating, one, two, three, four, five, on the fifth candle, you'll get, a hellacious break to the upside or downside, and then you will get continuation. Okay. Like you see here, we didn't get really any continuation, even though a big red candle like this should 70% of the time get follow through. Uh, Pretty close to equal value. We didn't at that time, okay? And even over here, this big green candle, if we had consolidated at the top of it, which is, more bullish than bearish, on the fifth candle, if that breaks to the upside, that's a go-to candle. High odds, high probability you'll get number of days, or depending on what time frame you're on, follow through to the upside, okay? All right, well, okay, we'll go ahead and finish up over here.
In shares, which is why price stayed in a very tight range. Now, what happened here is you had a dump out. All the people that bought here were like, holy crap, we just got smoked. And
But if they do, okay, and this, you can ask any of our Patreon members, they are taught in this consolidation zone to sit on your hands, and then once you break to the upside or downside, when you start clearing the bottom there, even on a 2-minute chart, you start clearing this. See this consolidation? It's a 2-minute chart on PayPal right now. Every candle is 2 minutes price action. See this consolidation through here? Did we break it? Yeah, right there. And here we go. And I'm trying to look for something else real quick. I haven't looked at the 2-minute chart. And he was talking about that inside bar, see through here? Did we break it here? See, yeah, follow through the downside. Consolidation, broke it, follow through the upside. Anyway, that's how we teach our Patreon members how to play this game.
slowly they've seen their money come back. The general psychology, and this is key, guys, understanding the human
Yeah, as you
mind.
come
The
back up,
general
people are
psychology is that
okay.
when you get back to break even, there's a large percentage, not everyone, some people swing for the fences, but a large percentage of people that will say,
Okay, that's another thing. I'm glad he brought that up. Okay, allegedly, when price comes back up to where people supposedly, were buying in up here, but if you knew our philosophy, our trading system, you wouldn't have done that. You would have caught, the break to the downside, break to the upside. And also, we have three types of stop loss, and any principal type that you decide to use for your own, trading, system, then, we pretty much guarantee, well, I mean, I'll guarantee it if you, can follow the system, okay, you'll never be wiped out of the market. Matter of fact, you will, soon become a withdrawer. In other words, pulling money out of the market, because we teach you about the stop loss, and that's the first thing you should be working on. Instead of, learning a lot of patterns and other fun, other nuances of, investing, trading, you need to learn, the three different systems, different ways of setting up your stop loss. And we teach you that, really day one. But all right, guys, enough of that. Thanks so much for watching the video. Check us out on Twitter. Check out our Patreon members group, and let's get to making some money.